Well, I did say yesterday that today would not be hard to predict, and it wasn't. In fact, in many ways it turned out to be even worse than I thought it might be. In one way it didn't quite, but it was bad enough, even with regard to that. As it stands, I will describe that briefly as well. The inflation report came out this morning. It was hot. It was bad. Okay, the market reacted accordingly in no uncertain terms. The interesting thing is the European markets fell hard already before the inflation report even came out, and then they fell even more afterwards. So the European markets had a really bad day today. Okay, bearing in mind again the European markets don't close until a couple hours or so after the American market opens, so they had plenty of time to react yet to the inflation report before the end of their day, and they most certainly did so, to the downside. They were drifting down before, accelerated down afterwards. The American market showed futures way down already in anticipation of a bad report, and in fact the market gapped way down. The Dow was down hundreds of points on the open already compared to yesterday's close, which, as you might recall, was already a big down day. Okay, so, but what ended up happening is, let's briefly take it a market at a time. The NASDAQ lost 12,000 yesterday. By the end of the day, it was well below that. Most certainly got far away from that today. Okay. The S&P 500 lost 4,000 yesterday, and most certainly got far away from that today to the downside. It's not even close anymore. Okay. And the Dow ended up gapping down this morning, as I noted. That went down a bit more, but in part probably because it is Friday, and because they are close to the level on the S&P 500 in the meantime, that would signal an official bear market by conventional standards of measuring that. Okay, they were absolutely desperate to try to avoid that on a Friday yet, and they did succeed in that. But on the Dow, they ended up at the next major round number level below 32,000, which was 31,500, very early on in the day, and then hung on for dear life to that for the rest of the day. Except, I'll get into that in a moment, there was an attempt at an end of Friday bounce. It failed. Okay, well, I mean, it may have been a bigger bounce than it normally would have anyway, simply because the market was down so much, but in percentage terms, it didn't amount to much. Okay, and it failed well before the end of the day. The market came back down again. All three of the entire American market, all three of the major indexes, and toward the end of the day, or near the end of the day, the Dow was just struggling not to go below the previous lows of the day, which were below 31,500. In other words, they were barely hanging on earlier in the day. And then at the very end of the day, it accelerated down yet. They got the opposite of an end of Friday bounce at the very end of the day yet. Normally, if that happens, it starts happening earlier than that, okay, not in the final seconds. I normally do watch the tail end of the day on the Friday because it can be so informative. In other words, yes, I do watch that in real time. And it was very informative today. Anyway, as I said, accelerated down in the final seconds. The Dow lost, as far as I can remember, close to 100 points just in the final seconds of the day. An additional 100 points is what I'm saying. Okay, it went down to a loss of more than 800 points for the day by the end of the day, closed at bottom tick, quite literally at bottom tick, okay? And in those final seconds, it did go below the previous lows of the day. In other words, in the end, the market did close at the lows of the entire day. But the hitting those lows happened in the final seconds. They actually rammed it up a fair amount before then yet, but they were not able to hold on to it. Now, One other note, interest rates. I keep talking about the 10-year bond, the 10-year Treasury note of the government. That is nominally in modern times the benchmark market rate, even though it is a government bond. Probably mainly because there's so much deficit going on in modern times that, you know, it's always going to be there for as long as things continue to go on yet. Okay? It is not the Federal Reserve rate. That's a short-term rate. Okay? It is the 10-year note rate, which is a long-term bond. Okay? Obviously 10 years long-term bond. It had gone to slightly above 3% as of yesterday, and I said a day or two ago that it was rocketing up and made it back through 3% in the process. Okay. Today it rocketed up again during the day and ended up way above 3%, close to 3.2% in the end. Okay, and closed near its highs for the day as well. This was not helpful to the situation today, and it won't be helpful in the future. Okay, by the way, I do expect interest rates to go even higher yet, aside from the fact that the Fed keeps talking about raising its rate, which is a short-term rate. Long-term interest rates will continue to go up. And one thing I should also mention is that the rate it reached today, namely at least nearly 3.2% on the government bond, that is a new high for the entire move since the low roughly a year and a half ago. The low in overall interest rates of roughly a year and a half ago. Okay, so we have reached a new high in interest rates by the end of this week. Okay, generally speaking, stock markets reacted accordingly. Okay, I suspect really the U.S. stock market reacted accordingly by the end of the day as well, because they tried to ram it up and then lost it. It went back down again and then went to new lows for the day. I think the only reason why it wasn't a total rout, relatively speaking, in the American stock market today was because it was a Friday, and so they were absolutely determined to try to make sure the end of week number, in other words, the number at the end of the week, would not look horrible. Okay, and they were down enough already, so once they hit 31,500, they were absolutely determined to try to make sure it wouldn't go much below that today. Okay, the European markets, as I noted, were not so fortunate. Okay, they went down big today, and I expect that to continue next week. Okay, and the Asian markets went down quite a ways too. So overall, it's getting more and more ticklish out there. Oil prices also did not come down. They topped out at about $122 a barrel on the American market so far, and they're still at about $120, so they didn't come on down significantly either. So the bottom line point is, it is not a good setup for next week. We will see what actually happens next week to see how that plays itself out to confirm that. But the setup is certainly there for not a good situation. Pretty much all across the board in terms of the various elements that play into that at this point. So it's not a good end of the week, as I knew it probably wouldn't be, because all indications were that the inflation report would indicate high inflation, which is exactly what it did. In other words, worst fears in that regard among conventional thinkers were confirmed, and the markets reacted accordingly. Okay, I even saw a report come out today, a flash headline, however true it may be, that some of the big banks and as a result of this, are beginning to predict that the Fed might raise interest rates by 3/4 of a point at its next meeting in a week or two. Okay, now that's just speculation on their part as well. Okay, no one knows for sure until the Fed actually does something. And I have my doubts that the Fed will take that move. That would seem pretty aggressive. That's more likely, I think they know too, that's more likely to spook the markets than help the markets. But I think the very fact that someone out there who's got a fairly official position in the banking industry was talking in those terms today already in light of the hot inflation was enough to spook the markets already, in terms of even just the possibility of the thought, the thought of the possibility that it might happen next time around. Okay, Again, there's no guarantee that will happen. I suspect it'll be a half-point increase at most, probably a half-point increase, because they've been talking about it, and inflation does remain high, and if they only do only a quarter-point increase, it probably won't have any impact. You know, that won't be noticeable enough. But a three-quarter-point increase is probably too much for the market to handle right now. But we will find out when the time comes. Okay, the bottom line is there's enough going on out there aside from Fed interest rate plans to screw things up already anyway. As I've been saying and predicting all along would be the case and would probably happen, it is happening these days now. Okay, now in the big picture, which is why I'm doing these videos in the first place overall. So anyway, that's where it's at for now. Let's do the best we can to enjoy the weekend, and then go from there wherever it's at starting on Monday.